Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Petersen.
All right. We are live with another episode of the Real Estate Investing Club. Hope you guys are having a great day wherever you are and whatever day it is for you. As always, it is Friday on the podcast, so we're bringing that Friday energy to you. And we have recently switched over recording software, so we might run into technical difficulties as we get this episode live. But hey, man, it's all good because we like everything in life. You just move on and figure it out. So it's going to be a good day because we have Paul Moore with us on the podcast. Paul has a ton of experience, but I'm excited about this because he likes self-storage, mobile home parks, RV parks, which is what I also love. So I'm excited to jump into this. Paul, thanks for hopping on.
Yeah, Gabe, great to be here.
All right. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. I know you have a long story in real estate, so why don't you go back to the beginning of your story and tell us how you got here?
I'll go back to the very beginning. So I started out with an engineering degree, which was my first big mistake. Not for most people, but for me, it was a terrible move. I got an MBA, went to Ford Motor Company 5 years, had my own company, sold it to a public firm after 5 more years, started investing in flip houses. The first house we flipped, we went to the courthouse steps and bought it. We were the only people there on an icy, snowy day in Virginia. And we bought it for $32,000, threw a coat of paint on the main floor, and sold it for $64,000. And we thought, this is easy. We can do this every week. And of course,
first
we lost
one that gets
money.
you. If you make too much money on that first deal, you got.
I know. We lost money overconfidently on 2 of the next 3 deals. And we found out it wasn't quite as easy, but we still flipped 40, 50, 60 houses in the next several years. Plus some waterfront lots at a lake. I built 7 houses, and I learned something really important for your audience, Gabe. You guys might want to write this down. You shouldn't build a house if you don't know how to tighten your own doorknob. I'm just saying. But pivoted to commercial real estate in 2011 and tried to be a multifamily syndicator, wrote a humbly titled book called The Perfect Investment. And that was about multifamily. But around 2018, we realized, hey, it's not the perfect investment. And I started telling my audience on Bigger Pockets and other podcasts I was on that, hey, look, if you have to overpay, over leverage, and believe trees are going to grow to the sky, in other words, rents are going to keep going up 11.2% a year in Tucson forever, then you better believe it's not a perfect investment. So we pivoted and we started studying Warren Buffett and his principles, Charlie Munger, those guys, looking for intrinsic value. Buffett says, price is what you pay, value is what you get. And we found out that there was more intrinsic value in mom and pop owned self-storage and mobile home parks. And then years later, we added RV parks. And so we're not an operator. We're a fund manager. We're getting ready to launch our 7th and 8th funds, all diversified across multiple asset classes. And that brings us up to today.
Nice, man. I love it. So you are one of the few people who have left multifamily. Most people that I get on here, they say multifamily is their bread and butter, but you seem to think that's not there. It's a little bit overhyped, which makes sense to me because I've looked at multifamily deals and they're all trading at like 5 caps. And it never made sense in terms of like the return you'll get and what you have to underwrite in order to make the deal make sense. So that you kind of reached that conclusion and you were like, no, this is not for me.
We invest in multifamily, but we love mobile home parks and self-storage. And we could take the rest of the podcast, me telling you story after story of uncovering undervalued, undermanaged, poorly advertised self-storage and mobile home parks that, we had one we bought on the eve of COVID February 20th, and we were the largest investor. I shouldn't say we bought it, but on February 25th, 2020, it was acquired for $7.1 million, half debt, half equity. And they got an offer $9.5 million a week later. And I pleaded with my operating partner to sell it. I'm like, look, COVID could kill us all. We don't know what's going to happen. Why don't you sell it and take the, would have been a 67% profit, I think, on the equity in a week. And he said, nope, it's going to be worth $13 million in 3 years. You'll see. Well, he got an offer of $15 million on it later that year, and after making several tweaks to it. Jeez. And sold it for a 347% IRR on the equity. And the key there, Gabe, was not because he was a great operator. He was great at finding deals. This lady who owned this had not even visited the park in years, if ever. And it was an institutional-sized park. Yeah. And that's the key.
Yeah. You always make money on your buy. That is for certain. So I want to get into both mobile home RV and self-storage. Let's take mobile home first. You said, you get most of your return on the find. So how are you guys going out there and finding these deals?
Yeah. So we have 4 operating partners in the mobile home park space, and they are finding deals. The most effective of them, it has a bullpen of 8 people sitting in a large office in cubicles, and they're calling, texting, voicemailing, and emailing, thousands, literally over 1,000 mom and pop operators a week. They're all 8 of them are working full time doing that. And they're cycling through, let's say of the 40,000 or so mobile home parks out there, they're cycling through maybe 20, maybe 30,000 of them every year, maybe twice. And what that means, Gabe, is that it's sort of like that ad you get for windows or roof. Those little ads you get in the mail. You're like, why do I get these? But the day you need windows and then that shows up, well, they're there. And that's what happens over and over. They started contacting a guy who was 88 years old in near Kalamazoo, Michigan, I think. And they contacted him 3 to 4 times a year for 7 years. And when he was 95, he finally said, yeah, I'm ready to sell now, and sold them. In fact, he said, I'm ready to sell. You made me an offer 2 or 3 years ago. Will you still pay me that much? And of course, the answer was, no, that's not enough. And he said, yeah, it's enough for me. I'll take it. Because they had built a relationship. Yeah.
Well, and 7 years, that is crazy. I think my longest, I followed up with a deal. It was like 2.5 years or something like that. But still, yeah. That's where the money is made, is just you get them in your database and then you don't let them leave until they either tell you don't ever contact me again or you get a deal done.
Right.
So yeah, that's great to hear. So what are you guys on the mobile home RV side? What are you guys looking for? Like, what's your criteria?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah. So mobile home parks, generally our operating partners are looking for poorly managed parks. The last deal we did is we're investing about $9 million in equity. The total equity raise is probably 12 or 13 million. Like I said, we're bringing 9 of it, and then the rest is seller financed, 42% loan to cost, 4.5% interest rate, interest only for
4.5%. Wow,
5
that's
years.
great.
I know, it's crazy. And there's about 50% park-owned homes. And so by converting, and this operator is a master at converting those park-owned to tenant-owned homes, and anybody who knows mobile home parks knows that's a big deal.
Yeah.
And
real quick on that, so when you guys have park-owned homes, how are you offering on those homes? Are you valuing the homes? How are you valuing the actual home itself? Is it a gross rent multiplier?
Yeah, let's quickly back up. So in commercial real estate, your audience probably knows this, so I'll just be brief. But the value is the net operating income divided by the cap rate. Well, that value, when these are appraised by banks or others, that value only applies to the lot rent, not the mobile home itself rent. And so the value of the mobile homes are just tacked on individually by value of the house. So it's let's say $10,000, $20,000 per mobile home, if you want to call it that. And so that's just tacked on to the income from the lot rent. Well, if you can convert all those mobile homes to tenant-owned homes, number one, those tenants will be responsible for the maintenance. Number two, now they become seriously interested in keeping it upgraded, keeping it maintained, keeping it nicer, and extremely unlikely to leave. If they've got a $20,000, $50,000 mobile home there, for them to fall behind on their rent and get kicked out and leave their mobile home behind or have to spend $7,000 to move it, it's not appealing. So there's so many reasons. The value of that park that's 50% park-owned homes, by taking the lot rent up 35% just to get it to the very, very bottom of the market range, and then by converting most of those homes, the value of that park skyrockets, probably almost doubles over about 4 years.
Yeah. So, but going back to the home itself, you apply a capitalization rate to the net operating income, which is the site rent only. But for the home itself, are you guys doing a gross rent multiplier, or are you guys using a tool to value the home? Because
full disclosure here, we work with 4 different operators. Out of our 25 operators, 4 of them do mobile home parks, and they all do it differently.
Interesting. Okay.
So I'd say the most common way that I hear is they just value the home itself.
Okay. So they use like a JD Power or something like that, and just have a tool.
I mean, if it's a $50,000 5-year-old home, they just say 50. And if it's a $5,000 1978 Fleetwood, then so be it.
Yeah. Yeah, that makes sense. I've always struggled valuing the homes themselves, because I usually just use a gross rent multiplier. But then that doesn't really give, that doesn't take into account the age of the home usually. So if if it's a brand new home, you should be giving more versus a really old one. And so, I've always been curious to hear how people are valuing the actual, park-owned homes.
Yeah.
Let's talk about storage. Storage is one of my other favorite asset classes. When did you guys get into it, and why did you choose storage when you first got?
I was sitting right over here, and in February of 2018, somebody called me. It seemed to be a call from a prospective investor in my multifamily deal. And he said, actually, I don't want to talk to you about that. I want to talk to you about why I just pivoted from multifamily to self-storage. Are you interested? And here, if you could have seen my face, I said, yeah. It was on a call, and I was like, no. Anyway, he laid out the case for self-storage over the next half hour, which prompted me to spend 2.5 hours with him again on another call, and then make a visit a few weeks later to their site in Atlanta. And I was completely blown away by all the compelling statistics about self-storage. I mean, one that stood out right away is, if I'm paying $1,000 rent and somebody raises my rent by 15%, I might leave rather than pay an extra $150 a month for that, for that apartment. But if I'm paying $100 a month for a self-storage unit and you raise it by 15%, I might grumble, but I think, I got a month-to-month lease. I'm going to take a vacation week soon, go clean that unit out, and I can leave there. It's only an extra $15 a month. It's not like I'm going to spend a weekend, get a U-Haul, get my buddies together to move my junk out and move it down the street to another unit to save $15, and they could raise it next month too. And there were so many other compelling things, especially the value adds, Gabe. I mean, think people who don't know this, some of the self-storage facilities will sell and they'll say stuff like this. Like the owner might say, yeah, I've got 6 acres out back I never had any use for. And of course, the professional operator thinks, wait a minute, I can gravel or pave that and, lease it for industrial storage, for contractors, for boat and RV storage. I can build more units if it means I should. The professional operator thinks I can add U-Haul and maybe get $3,000 extra a month in my NOI.
Don't talk to me about U-Haul. We're kind of angry at U-Haul right now.
I can put a billboard on the front. I can put a cell tower out in back. I can add a propane filling station. I can add an ATM. I can sell locks, boxes, tape, and scissors. There's so many value adds.
Yeah. So you mentioned U-Haul, and I am curious your guys' experience with them. So one of our locations, we started a U-Haul, neighborhood dealer out of the location, and we haven't figured out how to make it how to make it more profitable than that, or just how to make money out of it. We have money coming in, but it's so slow. Yeah. And it's almost negligible to the point where it's like, I just don't see why people are so hyped about getting U-Haul into their facility. Obviously, this matters based on where it is. If you're like downtown in a major city, I'm sure you get a lot more rentals. But what's your guys' experience?
Gabe, I've heard of people making $500 a month and it not being worth it. And I literally, I have never confirmed this, but I heard of somebody in Blacksburg or Christiansburg, Virginia, that has a really unique location making like $15,000 a month. Yeah. And I generally hear 3,000 to 5,000 is, in the top half of the range for most people, but I don't have an answer for that. I got to believe it's just location and competition.
Yeah, that's what I think too. That this location that we put it in, it was we're on a main thoroughfare in Indianapolis, and everybody was saying it's the best location to have a U-Haul, and we just could not whack it. Maybe we gotta rethink that one. But it's interesting that you guys, so 3,000 to 5,000 is kind of the average that you guys are seeing from adding.
That's U-Haul. What I hear a lot.
Yeah. Okay.
Again, we're not an operator. We work with 3 operators of self-storage, and they do all the nuts and bolts. So I knew enough to write a book about it, but not enough to run a facility.
That's fair enough. So one thing that is of concern on the self-storage side, at least for me, is places being overbuilt. The net rentable per capita is really high, especially, I like to buy in Texas, and most of the cities in Texas, there are self-storage facilities going up everywhere. And it just doesn't make sense in terms of the population that these cities, contain. So what is your thoughts on oversupply and the industry in general?
Yeah, we've made some of our very best deals in out of the way locations, Gabe, and we like that. I think that kind of aligns again with the Buffett mindset of finding intrinsic value. Who would have thought that a Beeville, Texas, population 12,000?
We actually, I own a facility or some place in Beeville. That's funny.
Do you? Yeah. Is it 607 units by any chance?
No. This is an RV park.
Okay. Yeah. So Beeville, Texas, who would have thought that 600 unit self-storage that was run into the ground by 5 feuding siblings after their parents died would have been acquired for $2.4 million and then sold a year and a half later for $4.6 million.
Wow.
But even more crazy, Ishpeming, Michigan, population like 2,000. 160,000 square foot facility, which again, who would have ever thought that would have worked? It's extremely profitable. And so My answer would be,
160,000
look
square
for
feet. That's a
store.
massive
What's that?
facility. That is a huge facility,
I
160,000
know.
square feet.
I know. I think that includes all the outdoor parking, our boat and RV parking and everything, but still, it's crazy to think that that would be so profitable. I can take you to Nashville and drive you all around and show you all the reasons it's overbuilt. But I could take you 25 minutes south of Nashville to, I think it's Bellevue or Belleville. I think they're both there, and show you why it's undersupplied because of regulations that have kept self-storage out, and a great place to be an operator there. So it's very, very neighborhood centric. You can't say Nashville's overbuilt, but you could say that a certain part of Nashville certainly is.
Yeah, that makes sense. So you guys are looking more in the tertiary markets. You're looking outside of major metros. I've actually had two of my best facilities are in the middle of nowhere in Texas, out just west of DFW. These towns are like, I don't know, a couple thousand people, but they work really well because they're on the highway connecting DFW to whatever the next major city is. And those kind of facilities. And I got them, seller financed. It was an old man who he owned both of them. And he was just like, I don't want to do this anymore. He was the one picking up the phone, but he didn't ever pick up the phone. And so they were like 10% occupied, and they were great deals. So those small
10%, that's a record. I've never heard that yet.
Yeah, he wasn't doing anything. He had bought these facilities a long time ago. He didn't actually run them, and I called him about them, and he was like, "Oh yeah, sure. Here's a number. Let's get it done." And I was like,
quick side story. I was I was in Fairbanks, Alaska, looking at a mobile home park that I actually flipped. And this is a funny story. The guy bought a sand and gravel operation with a huge lake that had been created, of course, by the sand and gravel. And by the way, it happened to have 210 mobile home park sites around half of the lake. And he didn't want those. So he sold it for what turned out to be a 25% cap rate. And I ended up acquiring that mobile home park myself. I owned it for 5 minutes and sold it to another larger operator. But while I was there, the point of the story, that's a great story because I sold it to him for like a 15% cap rate. We both got a good deal.
That's awesome.
But across the street, there was a rundown self-storage facility. Gabe, the phone number on it, I couldn't help it. I had to call it. And the voicemail said this, hey, you've reached Susie's Mobile Massage. I'm probably out giving massages somewhere in rural Alaska. I'll answer your voicemail within a week if I get around to it. That was the voicemail. I thought, I dialed the wrong number. No, that was the self-storage voicemail. Wouldn't that have been a great one to acquire?
Yeah, those rundown facilities, those are the gems. Whenever I drive, if I'm driving somewhere, I'm traveling somewhere, I always try to find those gems and just call them when I'm driving to see if I can get a deal done. Haven't got a deal yet that way, but one of these days I know it'll happen.
Yeah, well, we've been bashing on multifamily earlier. Let's just compare what we just said, the last 12 minutes or so, compared to multifamily, where there's hundreds of people trained by gurus chasing the same multifamily deals, and almost all of them are just overpriced, picked over, and they're so popular. It's a great place to avoid.
Yeah, well, and so much more could go wrong I used to flip houses, and there's so many things in the walls that you don't know. You just don't know. You have to open the walls in order to find the issues. And so, that's one of the main reasons why I like mobile home parks, RV park self-storage, is that there's very few things in terms of the actual CapEx that you need that can go wrong.
Yeah, so true.
All right. Well, I just took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. Are you ready?
All right, let's go.
All right. It starts with education. Could be any form. Could be a conference you've been to, mentorship program you've been a part of, book you've read, movie you've seen, anything. I need 2 recommendations, one for general life wisdom and then one for real estate.
For real estate, I actually, after doing some commercial real estate I mentioned in 2011, I didn't mention that in 2014, I spent $25,000 with a mentor that taught me everything about real estate syndication. And they were specifically in the multifamily arena, and that was priceless education. That was so much more valuable than anything else I've ever done in that arena. In the personal side, that's a tough question. I've done a lot of things, but I'll mention, I know you want to ask about a book. My favorite book is Larry Crabb, Crabb, Dr. Larry Crabb, Shattered Dreams. And I learned so much from Larry about manhood, about being a great husband, father, and about loss and pain and the role of pain. I mean, I think I may have told you that I had a podcast for 4 years called How to Lose Money. And basically it was about taking the pain and loss of business deals that went bad and turning that into success. And Shattered Dreams taught me so much about that in my personal life as well, from Dr. Larry Crabb.
Nice. I love getting new recommendations. No one has mentioned that one, so I might have to pick that one up. Shattered Dreams. And you said Dr. Larry Crabb?
Yeah, Crabb, Crabb. And then as far as my favorite business book, it's got to be by Gary Keller and Jay Papasan. And I know you've heard it 100 times. It's called The One Thing, which taught me the importance of focus.
Yep. Yeah, that's a good one. I read that a long time ago, but I like the idea because it's so easy to get distracted and get the shiny object syndrome and, split your focus here and there, work on this business and the next one. But if you can just focus on that one thing that matters, that's what gets the needle moving.
Right.
All right. Next question is for your younger self. Let's go back to the Paul who was just getting started so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, Warren Buffett talks about getting a circle of competence. He says it doesn't matter how big the circle is. What matters is that you stay inside it. And he and Charlie Munger have spent decades saying no to one great thing after the other. Warren Buffett was ridiculed in 1999 for not jumping on the tech bubble bandwagon, and he stood up in front of a bunch of his billionaire friends, including a bunch of tech billionaires, and said, I know you guys are making fun of me. You think I'm 69 and over the hill, but I'm not. He said, I actually would rather invest in Wrigley's gum than I would in your tech stocks, because I know how people will be chewing gum in a decade. I have no idea where the internet will be. And of course, a year and a half later, the tech bubble burst, and he was right yet again. And so my advice to my younger self would be learn one or two things really, really well and just stay focused on that. Don't get, spooked by shiny objects and chasing them. I've lost millions and millions of dollars and potential wealth by chasing shiny objects.
Yeah, that's one of the things that I struggle with the most is just stay in the course. Find your zone of genius, find the thing that you're good at, and then just keep going down that line.
Yeah.
Mobile home RV, self-storage. That is what I do, but so often, I want to get into industrial. I want to flip land. I want to, buy houses, short-term rentals, all the cool things you can do in real estate. But it really comes, expertise comes with doing the same thing over and over and over again. So that is good advice.
It's so true, Gabe. And I'll tell you, it's better to hit singles and doubles in your area of expertise than ever swing for the fences anywhere else.
100%. All right, next question is about the U.S. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
I'm going to cop out on you here, Gabe. Our company invests in like 45 states, and we are actually only averse to investing in California. So I'd say everywhere but California. But seriously, we are obsessed with getting the very, very best operators with the best team, with the best products. And again, self-storage, mobile home parks, RV parks, and then letting them choose the geography.
Nice. Yeah, I'm the same way. I don't really focus in on a specific area. I just look for the deal. But that's funny that you say no California whatsoever. Poor California. but there's a lot not going for them. The legislation, the fires, all the stuff.
I know.
All right, going to the next question. This is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times things go wrong, and that is when we get to learn a lesson. So go back to a deal that went a little sideways for you. What was the lesson you pulled from it?
Yeah, my mentor said, this is back in the multifamily days, don't buy anything before 1978 and ideally the mid-'80s. And going back to when I said, there were so many people competing for deals and so many people overpaying, believing trees would grow to the sky and all that stuff. We got desperate once and we jumped on a 1962 apartment complex. And the number of, maintenance issues we had with that was very high compared to, let's say an 80s built apartment. And so my lesson there was listen to your mentors. Don't buy, very old apartments. And there were so many other lessons, but if I have to stay short, that's a good one.
Perfect. I love it. All right. That leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah. They can find me at my website, Wellings, WELLINGS, wellingscapital.com. And if they throw /resources on there, wellingscapital.com/resources, they'll get a free special report on mobile home park investing, or another one on self-storage, another one on RV parks, or access to either of my 2 commercial real estate books.
Perfect. I will put that link in the show notes. So if you guys want to reach out, just click a little more in the description. It'll pull down that full description. In there, you can find Paul's links. All right, Paul, that wraps it up. Thank you very much for hopping on the show.
Gabe, it's great to be here. Thanks, man.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.